of lapses by Paytm Payment Bank over the last 5 years.
Taxation reforms are a steady job in the pipeline.
138% of the total fall comes in at 22,470. That's the target, at which point you'll have to ask the question, has the market completed something?
JLR EBITDA margins came in at 16.2%. The estimate was 15.1%.
Revenues declined 28%. The EBITDA was down 86% on a YOY basis.
Our increase in interest rate has happened mostly in the term deposit.
Flat opening for now, a tad bit in the green as you can see over there.
Private sector banks that have been weakest, dragging that broader Nifty Banks index lower.
And it's a positive steady start to the week.
Our plans are to do 56 hotels by 2026.
And with that, indeed, this is the 5th consecutive quarter of profits.
India's first EV or electric vehicle charging solutions company could soon go public.
So names like SJVN, NHPC, NTPC, all of these seeing big moves.
Okay, there is a bit of a sell-off as we begin the last hour of trade here on Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios. Guys, hi, good afternoon. And Nigel is joining us from the newsroom floor. Nigel, hi, good afternoon. Yeah, I mean, just a bit of a shakeout, whatever you want to call it. But from 2 p.m. on, from the highs of 2 p.m., the Nifty is given back, I think, about 60, 65 points or so. And now you've got just about 20, 25 points left on it. It's been that kind of a day. I guess on the index, it started slow and then shot up, but at no point really seemed very convincing in that sense. After, of course, what happened on Friday. Friday, remember, we made a new high, all-time high, and then there was a massive pullback from that high level and we left off, with about a 0.75% gain, which on the day was great, but from the highs was some 200 points off. But there you go. That's what's happening right now. 30-odd points is what we have now. Nifty Bank is actually absolutely flat. It never really went anywhere, even when the Nifty was flying high. The Bank Nifty will come up on your screen. But having said all of this, just look at what's happening with PSEs once again. It's actually a repeat in a way of what we saw on Friday, and I guess many days before that as well. CPSC, Energy, Oil and Gas, PSU Bank, that entire gamut of, there are 4 or 5 of these PSU Bank indices, different clusters. They're all flying high once again. The Nifty PSU Bank index, by the way, is again 1% higher. And that's why I'm saying, the private banks are sulking. Bajaj Finance and the banks, they're all sulking. But the PSU banks are doing not as well as they were doing last week, but more often than not, they are up rather than being down. Rima.
Well, PSU banks may not be doing so well, but the rest of the PSU basket is flying high, led by Coal India, the top Nifty gainer, a rally of 6%, BPCL up 4.3%. You've got strength in ONGC and Power Grid as they inch up by more than 3%. On the way down, the last 30-minute sell-off has been concentrated in names like a Bajaj Finance. So Bajaj Finance has suddenly cracked and is down close to about 3-odd%. You also have Bharti Airtel grinding lower. Bajaj Auto has now moved into the red. But the big loser today continues to be UPL, and now just extending the fall on the way down. 10% gone on UPL.
Absolutely. So you're having these individual stock moves, the big ones, as you mentioned, Paytm, another circuit day, UPL. These are the big news makers. But I think overall on the market, we're not any wiser after the sell down that we had on Friday, because this has been a very range-bound session. Globally as well, markets are not giving any clear indication of a move after the latest comments coming in from the Fed chair on that television interview. The bond deal, for instance, the 10-year benchmark bond deal, it's still above 4%. So that guessing game on how much will we get from the Fed, that is well and truly on. So not too much of a directional move coming in. I just want to talk about a couple more stocks here. Bharti Airtel ahead of its numbers, down 2.5%. So that's something worth noting. Then you have a lot of the big boys. L&T is not participating today. SBI, the reaction has been muted after the third quarter numbers came in. And today you don't have the kind of firepower that Reliance was giving the street last week. So that's also missing. So sort of quiet, very, very range-bound start to the week is what we're dealing with, barring the PSU space. That, of course, is a different story in itself. But Nigel, I guess slow and steady and I think treading water spending some time around these levels?
I think all of you mentioned the PSUs, and I want to highlight something with regard to these PSUs. SJVN, NHPC, just get the intraday chart of both these two stocks up for you on the screen. In the last 10 minutes or 15 minutes, SJVN has lost 10%. Pull up the intraday chart out there. If you can pull up, those candles as well, it'll give you a better picture. So SJVN, NHPC, you have some of these banks that have low liquidity as well, whether it's IOB, UCO Bank, all of them down anything between 3 to around 5%. The intraday chart of these stocks should come up for you. There's a big downtick that we're seeing. Some of them liquidity is very, very minimal out there. Bank of Maharashtra as well was up more than 10% odd. So there is some kind of profit taking that's creeping into some of these PSU names. SJVN, that's the perfect example, as well as NHPC. Massive downtick is what we have seen. That said, the larger names like a Coal India has hit a record high. What a beautiful move we have seen on the stock. From ESG concerns, suddenly people are talking about value. They're realizing that this economy has to grow, and if economy has to grow, a power is required, and a power is required, you'll require thermal capacity coming on stream, which will require coal. So that's the reason why that stock has moved up as well. And as we speak, the Nifty is as flat as can be. The big question is, how do you position yourself as the markets are as flat as can be? Let's get in. I think we've got Mr. Sethi of HDFC Securities who joins us on the show. Hi, sir. Good afternoon. What do you make of today's trading session? The Nifty is as flat as can be. The Nifty Bank is down 170 points. Levels you're looking at?
Hi, good afternoon. Yes, rightly said, Nifty has been in a range-bound action and showing some weakness from the higher levels. Chartically, at higher levels, 22,000, 22,100 has been a strong resistance market is facing right now. And there is a possibility of some more dip from here on. And at the lower level, 21,700 to 750 is going to offer a strong support for the market. I'm not expecting any bigger damage or bigger reversal kind of a pattern over here. And this consolidation is likely to continue for the next 1 or 2 sessions. And at the lower levels, 21,700 to 750, I'm expecting buying to emerge, and very soon Nifty going to reach the new all-time high of around 22,100 to 200 levels in the near term.
What about stocks? Would you have any recommendations, Nagraj?
Yeah, I have a recommendation. We know that so many stocks are, the stock rotation is happening over the day. And I have 2 stocks right now. First one is a Rain. If you look at the chartically, Rain has witnessed a phenomenal up move in the last few sessions. And after the small consolidation, again started to move up in the last 2 sessions. Showed minor consolidation, minor weakness from the high levels, but the overall chart pattern is still positive. Currently trading around 188. One can look to buy around at this point of time. One can place a stop loss at 178, and a target would be around 20203 levels. Second one is Poonawalla. Poonawalla has been in a consolidation phase in a minor downtrend over the last 7-8 sessions. Today made an upside bounce, moved above the key moving averages, and made a higher bottom at this point of time, and currently showing placed at the higher levels. The overall chart pattern for the Poonawalla is little quite positive. Currently trading around 482, 483 levels. One can buy at this point of time. 505 could be the next target, and 472, 73 is the stop loss for this stock.
Thank you very much for that. Moving on, IndiGo is the stock on our radar right now. Sudarshan is standing by with some exclusive details on that stock. Sudarshan?
IndiGo has reported a strong set of earnings in Q3. And now we understand from sources that Rakesh Gangwal's next tranche of stake sale in the company is likely to happen in next few days. Remember that 150-day lock-in period that Gangwal had for the next tranche of stake sale will end on February 13. Sources also inform us that road shows are currently underway to gauge the investor interest. Talking about the previous stake sale, Gangwal has so far sold stake of more than 11% in last 3 tranches. And the last tranche was in the month of August 2023, in which he sold 5.85% stake at a price of Rs 2,400 per share. Since then, stock has surged nearly 40% and is currently at a record high. Talking about his holding, as of December 2023, Gangwal's holding in the company was at 25%. We'll have to see what quantum he decides to sell in the next tranche. Remember, after a long dispute amongst promoters, Gangwal in early 2022 had announced that he would sell the entire stake in the company over the next 5 years.
All right, that explains why the stock has been quite nervous. Thanks a lot for that, Sudarshan. Well, the stock has come off now from the high point of the day. I remember the start of trade as well. It was up close to 4 to 5% in opening tick. And from there, it's seen some bit of profit taking. And now, in fact, as we speak, the stock has moved to the low point of the day. Nimesh is here to tell us about OMCs. But Nimesh, you want to weigh in on this? This will be a bit of an overhang on the stock, I think, in the near term.
This will be an overhang in the near term for sure. But, you know, if you look at the trajectory of the last 3 stake sales as well, the first stake sale happened at 1800, then the stock moved to 2200. The second sale again happened at 1800 odd, stock was at 2400. Last stake sale happened at 2400, and the stock was at 3000, right? Or now it's at 3200. So this is going to be an overhang. It's going to come for sure because again the 150-day lock is going to end very soon. You know, the other important thing is it's a large stake, 25%.
Yes.
But there couldn't be a single buyer to this. The simple reason is it will mean an open offer as well from somebody strategic who wants to buy. So strategic sale looks unlikely. This will come in tranches in the open market. The Ganwals have said that over the next 5 years they're going to sell out completely.
Yeah.
So that overhang is going to be there. But again, you know, it's going to be a very short-term impact, is what I understand. Because if you look at even the brokerages, everybody seems to be in the range between 3,500 to 4,000 in terms of target price, right? So, of course, this could be a near-term overhang. But otherwise, once it's done, I guess stock will have its own fundamentals to track, which looks very strong given that, you know, this was quarter 4 is seasonally strong as well. So look out for numbers in quarter 4 as well.
Whatever has been offered has been lapped up in the past.
Absolutely.
So though it's an overhang, it's being lapped up and there's enough demand out there. But tell us, you know, about OMCs. I think there's a brokerage note.
Well, you know, so again, that's been the big talking point, right, as to how much more the OMCs can rally. Again, you know, there are a lot of brokerage notes which are suggesting that the run-up, there is still room for these stocks to go up. In fact, I put out a piece just 2 weeks back on the PSUs. And I clearly mentioned that within the PSU basket, as far as valuations are concerned, it's the OMCs where there's still valuation comfort and the PSU bank stocks. And that's where the big traction seems to be in the last 2 weeks, right? So look what has OMCs done in the last, since Y2D. IOC is up 35% and HPCL and BPCL are up 30% each. In the last 3 months, the JP Morgan note says that they've rallied between 60% to 100%. And that's largely been driven by strong EPS upgrades and low initial valuations. Now they believe if things stand as they are, they expect further EPS upgrades in FY25 as well. So there's going to be an earnings support and EPS support for these companies going forward as well. And their preference seems to lie more on BPCL over HPCL. So that's the JP Morgan view. Even Morgan Stanley is on similar lines. They believe that there is more room for further upside in the OMC stocks. In fact, they believe that the refineries are at a multi-year re-rating and there's going to be massive earnings upgrade cycle as well. And again, you know, even after the big run-up, these stocks are underappreciated by the investors. So that's the key reason why they expect the rally to continue. Now, just a word on the valuations. While Morgan Stanley believes that HPCL has rallied and is closing the gap with BPCL, there is still room for IOC. And why they're saying it, if you look at IOC's valuations on 1 year forward, they're trading at close to 1.2 times price to book, which is still 19% lower than one standard deviation. So that's the reason why Morgan Stanley believes there is a more room for IOC to outperform. As far as BPCL is concerned, that's trading at close to 1.5 times price to book on 1 year forward, which is at historical averages, not very high from the historical averages. And so is the case with HPCL as well. They are trading at close to 1.5 times price to book on 1 year forward, which is again very much near to the standard deviation. So there is a valuation comfort. There is going to be an earnings upgrade as well, and hence most of the sell-side analysts believe that this momentum in OMCs can continue. All
right, thanks a lot for that, Nimesh. By the way, you know, the OMC basket is looking good, but just pull up a split screen, I think, of 2 indices. One is the PSU Banking Index. The intraday chart should come up for you out there. That's now down close to 1.8%. Also, the intraday chart of the PSU Banking Index should come up for you. And the Nifty PSC Index as well, it's still holding well in the green. But a lot of those stocks have suddenly come off the high point of the day. So it appears someone's taking some money off the table. There's been a big rally in all these PSU names. As Nimesh mentioned, the OMCs are still looking pretty much good. And they are still holding with gains. But other public sector stocks, well, they have seen some bit of profit taken. Dipan Mehta of Elixir Equities joins us on the show. Hi, Dipan. Good to see you in and good afternoon. What do you make of the OMCs? Well, even after such a big rally, on a valuation parameter, there is still some comfort. Your take?
Yeah, good afternoon, Nigel, and thank you for having me on your show. I think multi-decade underperformance is getting reversed, and we are seeing that valuations, especially price to earnings multiple, is expanding. And that's more to do with improved performance and expectation that crude oil will remain subdued, which means that these companies will have full operating leverage to increase, to get the maximum out of the marketing margins. And that's, I think, going to be the big kicker. Also, I think after many years, a company like BP, HP, we are going to see them expanding their capacity, especially refining capacity. And that certainly would mean would mean they would get the benefit of the refining margins as well, because they are captive buyers for their own refinery products. So many things going positive for oil marketing companies, and I do feel that even from these levels, there could be a decent trading rally because valuations are still in that single-digit type of price to earnings multiple, and these certainly can move up. End of the day, these companies can easily deliver 9-10% type of compound growth, and that's not yet reflected in their valuations.
Okay, all right, got that. Deepan, hi, good afternoon. By the way, those are Kansai numbers, and the market's liking what it's seeing because the EBITDA performance is quite good. This is very much like Asian Paints. Asian Paints delivered quite a strong set for the third quarter, and Nerolac seems to be following that up. Look at that huge move on the stock right now. EBITDA is up 24%. There's margin expansion over the same period last year, 25% nearly rise in EBITDA. Deepan, so, weighing on paints, again, it's a sector that hasn't rallied as much as the other pockets of the market, and at least the Q3 numbers are looking very good. Asian Paints was good, and even Kansai, at least at the at the operating level, looks very, very solid. What would your advice be? Is there a bit of a catch-up rally here that could perhaps be in the making?
Yeah, good afternoon, Surbhi. I think that what we saw in Asian Paints and in Kansai is a lot of it is due to with lower raw material prices, and that's reflected in higher operating profit margins. But at some point of time, definitely competition will start to impact these companies. And as new players try to gain market share, there will be perhaps subdued volume growth as well, and that will impact operating leverage ratios as well. So I'm a bit, I would say, cautious on the paint industry, and would just like to wait and watch for this phase of competition to settle down and see where the market shares are, and what the kind of pricing power still remains, and where the operating profit margins are on a steady state basis. Not like this when raw material prices have been lower, and compared to base, certainly they've come off even further, the raw material prices. So just wait and watch. It's not that valuations are at extremely attractive levels. Kansai, Asian Paints still trade at 40, 50 times, 60 times also, trading 12-month earnings per share. So it's best to stay away from paints and remain underweight.
Just want to point out that the market has taken a real dive now. So, right, we were talking about how from 2 p.m. when we started, the market already sold off about 60 points. And look at that now, we're actually on the day down about 45 points. So this is quite something, not being able to sustain. I mean, from the high today is 21,964. And I think we are down about not quite 200, but now sort of closing, getting to that 200 point off the day's high very quickly. 190 actually is the fall from the day's highest point coming through. That's a fast moving screen. Even as we speak, from 45 down about 76 odd points, 80 points, 85. Wow, look at this go. Let's just stay on that screen, 89 points, and it's coming through really fast. Now, so take a look at, okay, now my screen is stuck at 89. Maybe we'll have, if you can just refresh it, we'll get a sense of what really is going on. But it's a sharp fall that we are seeing at this point, 80 points. Yeah, so very fast in the last, 10 minutes or so since we've been on closing bell. Just a quick note in terms of where this is coming through from, in terms of just the contribution maybe. So Bharti was contributing, was the top sort of contributor on the downside, even when the market was up 60, 70 points.
Stocks only.
Everything's fallen.
It's mostly
it's
the
across
PSU
the board. It's
stocks
100 points gone on the Nifty suddenly, gone in a flash.
Yeah. Now, Reliance, maybe if you can pull, you've got to look at the heavyweights, right, in terms of just to look at the contribution. Reliance is perhaps one. When we started, stock was at about 29.20. It was exactly at 29.20. And yeah, that is the one actually. Now it's at about 28.89. So sharp sort of turn on Reliance Industries, contributing on the downside. So contribution wise, just 20 points, index point wise, but it's a fast moving screen as we are saying. Bajaj Finance is the number 2, but it was down in any case. HDFC Bank, look at Levergo, look at HCL Tech coming up on your screen, UPL, Infosys, SBI, and so on and so forth. I mean, so it's 117 points gone now. And the Nifty Bank is also, which was actually down, up 0.25%. I mean, actually flattish when we started at 230. It's down a full 0.5% or so. It's down about 250 points now. Nigel?
Guys, I just want to point out the large caps, as you mentioned, they've seen a sharp downtick, and that's why the Nifty is down 100 points, which means it's down 0.5%. But just take a look at the broader markets. SJVN, at the start of, maybe at the start of this hour, that's around 2 p.m., the stock was up 15%. Now it's up 2%. 13% downtick is what we've seen out there. Punjab and Sindh Bank, I recall the stock up more than 15%. Pull up the intraday chart on Punjab and Sindh Bank. Big U-turn on some of these stocks. HCC, the stock that has seen a one-way rally, up and about. It was trading well in the green. Now, in fact, it's down close to around 7%. So just pull up some of these intraday charts. It'll give you a sense of how these stocks have fallen. Mind you, some of these stocks have seen a big rally. Hoodco as well. You're wondering what's going on out there. The stock has seen a big rally. Now it's in the red. It's in fact down close to around 5%. So from being well in the green, some of these stocks have absolutely fallen off the cliff. I hope you're getting some of these intraday charts up for our viewers on the screen, even IDBI Bank as well. There's some massive profit taking that we have seen, particularly in the broader markets. The headline index, yes, it's down close to around 0.5%, but from the broader market, some of these PSU banking names, some of these PSU names as well, some of these smaller private sector stocks, they as well have seen a big cut. Prashant, also pull up NBCC. I think we were discussing that a couple of days ago. That's now moved into the red. So a fair bit of profit taking. Someone has just jammed the sell button and taken some money off the table. Maybe it's just a knee-jerk reaction as we speak. And we can already see the Midcap Index has recovered quite a bit, but individual stocks have suddenly seen quite a bit of selling, guys.
No, absolutely. I mean, what it also highlights, Nigel, is that I think, nobody obviously says it, but in the smart money circles, there is acknowledgement that this is in some of these, mid caps and especially in some of the lower rung PSU stocks, etc. I mean, stocks don't go up 10%, 20%, and they don't double in a month, right? Without any discernible change in fundamentals or anything. So that acknowledgement has been there that it's perhaps too good to be true, the pace, but the point is that the money's been made so fast, right? I mean, you buy something 2 days, 3 days later, you're up 20, 25%. So no one really wants to miss out on that. And that is what has been going on. But I think what this also shows is that feeling is very much there, that you're playing momentum in many of these names. And at the slightest touch that maybe things are starting to turn, you don't want to be sort of left holding stocks. So people sort of, get off this train equally fast when things turn a little sort of, shaky. We've had a bunch of these, not many, but we've had at least 4 or 5 instances over the last 6 months. We've had intraday kind of sharp turns, etc. And you get very sharp reversals, but then, a day, 2 days later, things start to become all right once again. So we'll have to see. The Nifty, by the way, I think is picking up a little bit. We are down about 70 points, which means we've pulled back already about 50 points or so from the day's low right now. Deepan is still with us. Deepan, any thoughts on what we are seeing right now?
No, Prashant, you know my view. We are a bit cautious on the market, and according to us, the earnings season has not really played out well. If you look at the valuations that a lot of these stocks are trading at and what quarterly numbers have come, you can easily justify that these kind of valuations, at least in the short to medium term, are not justified, and markets may have run a bit ahead of themselves. So we are working with a kind of a 10-15% type of a correction over the next 2-3 months or so. And, one needs to just wait and watch and see how these earnings play out, because we are just finding that companies are growing at 10-12%, but they are trading at 50-60 times trailing 12 month, and base effect also is catching up very fast. And apart from a few sectors like maybe cement, to an extent steel, by and large I think earnings have disappointed. And if your banks are not doing well, how can you expect the Nifty and Sensex to continue to roar ahead the way they have been? So I'd recommend extreme caution at this point of time. And one should, at least get out of leverage trades.
I just want to say that while you gentlemen were having this chat, the market went from falling about 120, 125 points to now a decline of just about 60 points. I mean, you've got to be a real braveheart to try and trade this. The VIX, by the way, and that's quite obvious, the volatility index is at the highest levels that we've seen it at in the last 1 year. It's still hovering around that 16 sort of mark, 7% gain today itself. It dipped just after the budget, when we thought the event is out of the way and the Fed is done and the budget is done. So there was a bit of a dip that came in just after the first, but then volatility has picked up because these very, very swift and sharp shakeouts are something that have become a bit of a hallmark in the last 2-3 weeks or so. Deepan, just, a word, get your sense of caution on the market. Where would you advise profit taking? I mean, I don't know, maybe it's the PSU space, that's a bit of a maybe a no-brainer, but anything else where you would want to lighten positions, considering that you have a fairly cautious view?
Yeah, I think specialty chemicals is something which has really disappointed, and even software, mid-cap software included, with the exception of KPIT. And mind you, KPIT is now the most expensive mid-cap stock in the universe. Apart from that, software companies, both large and mid, have not done as well. And even some of the other consumer-oriented businesses, there have been disappointments here and there. So I'd, say across the board, one should lighten up their positions. And of course, I think PSU shares, especially the ones engaged in capital goods, be it railways or defense, they have run ahead of themselves. They are trading at rich multiples. And I'm not sure that they can have the same kind of earnings growth quarter after quarter to satisfy investors. So some money can certainly be taken off, on the PSU stocks as well. We are seeing what's happening with PSU banks. They were darlings of the market, but once the numbers have started trickling in, on such numbers, you can't go ahead and add position in a SBI or a Bank of Baroda or Bank of India. Because end of the day, the numbers are certainly weak. You are seeing compression of net interest margins over there. And whatever profit growth is there is on account of lower provisions. And that cannot last forever because base effect will catch up over there as well. So I think across the board, one should look at trimming positions.
Dipan, thank you very much for joining in. We need to slip into a very short break. On the other side, we'll be joined by Amit Gupta of ICICI Securities PMS. Stay tuned.
Okay, welcome back. The market's still down. I mean, almost triple digits, 198 points to be precise, and immense amount of volatility, very sharp volatility in a very compressed time frame. Last 10 minutes is when all of this has happened. From being up from being up about 20, 30 points when we started, being down 120, then back up, and then going back down a little bit once again. Mid-cap and small-cap indices are also in the red, but barely so. They're off the highs though quite a bit, and the intradays will tell you the story. So all of these started about, the mid and the small cap indices started selling off at about 220-ish, a little before that. Amit Gupta is with us, Senior VP and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here. Thanks for your time. If you're watching the screen, it's the definition of a very nervous, jumpy kind of market. If you could kind of define the market as a collective, and read what they're doing through the price action, it's jumpy. And maybe it is jumpy because of the kind of price gains we've seen, and especially in PSU names. Absolutely, in some cases, I would say bizarre. I mean, very tough to explain. There are those where perhaps some of these gains are justified, and those where there's momentum at play, right? Gains beget gains. PFC, I think, is one of your largest holdings, Amit. Just talk about the PSU space and what you're seeing there. Are you seeing irrational exuberance in many pockets there? And then talk about PFC specifically.
Yeah. So you rightly mentioned, I mean, if you look at the last few months, non-PSU stocks have broadly underperformed the PSU index. So it is very important to understand, where this PSU index is taking us from here, because now the election, our election, US election, interest rate cuts, everything market is looking at from here onwards. And yes, it has also moved up. So when I look at the PSU index valuations and compare with the Nifty valuations, it used to be almost 31% discount from 2010 till 2016. And then it declined to 68% discount. Now it has recovered to 48%. But still, if it has to go to 31% discount of the initial period of the last decade, then another 32% of upside is possible. And that is where my sense is, these companies which are coming out, which had a long period of decision-making problem, which had a long period of cash flow problem, and the order book position, which is very sustainable now, if they are coming out, I think this 32% move can lead to many stocks performing in this particular bucket. You look at the mining companies now, for example, they are coming out after almost 10-15 years of long lull period. And we have seen that Mr. Prime Minister, he called upon the Ministry of Minerals, and they were looking for critical minerals in the market, which are needed for India. And that is where India wanted to become Atmanirbhar. And that is where actually those mining companies are performing now. So my sense is this set of ideas will work still in the PSU space. And that is what we need to look at. So this is the exercise one needs to do going forward in the couple of years also.
Specifically, Amit, talk about PFC, which is your largest holding at about 8% of your portfolio. Now, the stock has gone up 300%. Explain how one justifies significant upside from current levels in terms of fundamentals, valuations. If someone buys PFC from here on, what should they expect? PFC or even REC?
Yeah, so PFC is the holding company, and we bought this stock around 170 rupees. We are still holding. So there is, one way one can see that it is already stressed, but we don't believe so. I think if you look at the valuations here, so it is 1.25 times price to book, which is still much, much cheaper in comparison to many NBFCs in the market. And you look at the funding requirement in the power space now. So previously we were talking more of thermal power, but now renewable as a base is also expanding. So of the overall book of PFC, 25% they are talking about moving into renewables. And that is where ESG funds, which generally nowadays we are not talking about. So that money also moves into those power stocks, which are moving into renewables, whether it is the financing companies to the power. And this is the trigger, I think, going ahead for these companies. Just take the case of Titagarh Wagon, when the whole investment cycle started for where we were talking about railway wagons manufacturing, the stock became 10 times. Then why are we getting shy away with the 3 to 4 times of recovery in the stocks? So when the money flow comes in, right? So last year we saw in 2023, within 6 months, FII flows came in actually in the Indian markets of almost 1.7 lakh crores. And it has not gone into the previous favorites of FIIs. So where this money has gone into, it is also looking at the growth stories in India. So when in the emerging markets, India is growing by 6-7%, that money is also looking for the growth. And that is where when other growth stories are picking up, so liquidity can drive it higher also. Yes, intermediate declines, consolidation, it is part of the game. That's why I use the word 2 years at least, where you need to hold on the positions now.
Okay, Amit, hi, good afternoon. Financials. I mean, at an index level, I think this market is going to find the going tough unless large financials move, right? And that's where the big question mark is right now. You have a lot of holdings, of course. ICICI Bank, I can see SBI as well, and there's BOB as well. What do you make of things that this whole fear around margins? I mean, look at what happened to Bank of India, for instance, today. The stock has just been slammed down despite stable asset quality. So just what is your sense on what we are in for? How long can this confusion and this pain last on banks, and what would you buy? I mean, if you would, in the fall.
So private banks, they are holding a higher chunk actually in Bank Nifty and also in Nifty. So when the money flow is not moving there, and obviously it is not moving over there because of the valuations also. And we need to understand this. And I think the select PSU banks, for example, Bank of Baroda, you mentioned, it is part of our portfolio. You have clearly seen it is outperforming the other lot, right? And it is just crossing, 1% of return on assets. I think that is the key for major PSU banks right now. NPAs are down. NPAs rather are down by almost the 10 years. I think the major kick now, which was somewhat suggested in the budget also, is the private capex. So that why the government has kept from 10 trillion dollars to rupees to almost 11 trillion rupees. So only 1 trillion they have increased, because they are also betting on the private capex to start moving higher. In fact, we had seen before that mostly the money was moving from households into real estate, or it was a central government capex. But now the listed corporates have done more than 8.1 trillion rupees of capex in the last 12 months. And that is where I think this corporate lending book of these PSU banks is likely to grow from here, which is hardly 6%. It is not average credit growth of 17% that generally you see, where the RBI also had raised the red flag of unsecured lending higher. And so my sense is, with this corporate lending book growing, which has already started, initially the corporates had a lot of money because they were not doing capex before. Now they are using the internal accruals, and now they are moving into banks. So this is where I think PSU banks, with this volatility, they are going to be major movers. Plus the Indian bonds, which are going to be included in the JP Morgan bond index from next year, then Bloomberg will follow and Russell afterwards. I think money flow will keep the bond yields lower. That will be the driver for the treasury profits also.
All right. Hi, Amit. Good afternoon. Good to see you. And, Amit, the big one in there is HDFC Bank. And I'm looking at your portfolio. I can't see it in the top 10 holdings. So good on you. I mean, you managed to miss that, because the consensus has been do a sip, sip, sip. And all the stock did what? Dip, dip, dip. But at this valuation, what's your view? Do you think that it's time to take some bit of allocation, or you say, I'd rather stay with an ICICI Bank, some of these PSU banking names that you're talking about? Is HDFC Bank catching your attention or not?
See, the stock has become 13 times from 2008 to 2020. Still, if you want me to carry on those, or to give those kind of returns, I don't think so. So whenever the new rally starts, it contains its own leaders. And that is what we need to look at, that from where actually the money flow is coming and where the to grow in excess of 20%. So that is the opportunities. And that is why the money is divided. So, and that is the reason those valuations are getting derated actually right now. So I understand your point, the levels are good, but we are looking for growth. So even you look at index, so index can remain around 21,000 for some time, but it does not mean that you cannot make money in the equity markets. And I think that is what our focus should be. So even in index, Nifty, you will find some stocks where hardly any weight is there. I see in 2021 when we bought Mahindra, it was hardly 0.5% of weight. Even it got tripled how much impact it had on Nifty returns. You look at NTPC, actually it hardly 0.5% of weight when we bought around 170. So it has moved up, but hardly how much impact on the Nifty. So that is where the India is changing and the markets are changing. I will not be surprised after 10 years, we will have a little different color of the index also.
Right. So Amit, as of now, HDFC Bank is still not something that meets the criteria as of now, right? It'll be an avoid till now.
Yes. Yes.
Okay, got it. But from the mining and the power space, I think you're looking at some lithium players. What are the stocks? Tell us.
So I think that's a good opportunity. See, this is what I call as materials research. And this is where some capex is moving, whether it is PSUs or some private companies. The companies in India, they are looking for some critical minerals actually outside, or materials outside to acquire. If you see recently what has happened, the lithium prices actually have declined. It has declined by almost 70%. Why? Because the Chinese market, which is a very large EV market, there was a slowdown actually there, and that led to the decline in the lithium prices. And if you see the impact on the South American countries like Argentina, so there was a higher inflation impact over there, and then this decline in the lithium prices. So their mines are on block, and that is where Indian companies are looking to purchase. I think this is the next trigger. So you have seen in Jammu and Kashmir, we already saw 5.9 million ton of reserves, lithium reserves coming out. But this is another big leap where companies are moving and they are looking to acquire. I think it's a good time going to be for mining companies. You are seeing the iron ore prices are still lower. The lithium prices are still lower. If you can acquire, and going forward, suppose the dollar depreciates further and these commodities starts moving up, it's a win-win situation for all of these companies actually going forward.
Thank you, Amit, for joining in. Great conversation. Need to move on now. Torrent Pharma is up close to about 5%, surging after reporting the Q3 numbers. Ekta is here with the highlights. Ekta.
Thanks for that. Well, Torrent Pharma did come out with numbers on Friday during market hours. Its conference call was held post that. Now, remember that they did come out with good set of numbers. Their EBITDA margins were at all-time highs of around 31%. The US revenue was a bit sluggish. It was down 7% to $33 million on a year-on-year basis. But the conference call, they were quite positive in terms of guidance going forward. They have guided for sustained improvement in margins. FY24, US may see a decline, but they are guiding for a pickup in the US in FY25 with 6 to 7 launches planned. The recent clearance of the Dahej facility plus pickup in the Indrad facility should aid the US markets according to them. They've also guided for growth in Germany in the next 4 to 5 quarters, and Latin America should probably grow in low double digits as well. Brokerages are positive. Elara has retained its accumulate stance, raised the target price. Antique maintains its buy. CLSA downgraded the stock with a target price of 2,800, so they have an outperform now. Jefferies and JP Morgan both have retained their stance. Jefferies buy and JP Morgan neutral, but both have raised their target prices on Torrent Pharma.
Okay, all right, Ekta, thanks a lot for that. By the way, as Ekta went through those details on Torrent Pharma, just take a look at the Midcap Index. From being down close to under 110 points odd, it's moved into the green. So it's a big tussle out there between the bulls and the bears, and it's a pretty evenly matched contest as we speak. But let's move on. Since January 2023, the government has carried on various offers for sale in 6 companies actually. 5 out of the 6 have doubled from their OFS price. Hormuz, he's on top of that. He joins us to fill us in with more details on that. Hormuz, what do you have for us?
Well, I don't want to jinx the PSU rally that is currently ongoing, but then the list is such, right, that over the last 10 to 12 months, the government has sold stake in 6 state-run companies, PSUs, and ranging from Coal India to SJVN, and 5 of them have already doubled from their OFS price, and it is in a very short span of time as well, right? And I start off with HAL, which was the first one that they sold starting 2023. It was in the month of March where they sold around 3.5% stake. They sold that stake at around 2450 rupees. Currently, the stock is close to 3,000. From the OFS price, it is up almost 150%. Now, remember, the HAL had a stock split, a 1:2 stock split in September last year, and ex-split, the stock is now up 150% from the OFS price. Coal India joined the party very recently, just a few minutes ago. It hit a record high. It hit an intraday high of 450, doubled from its OFS price of 225. The stake sold was around 3%. They sold it in June of last year. RVNL is the other one. They sold around 5.5% stake in July. They sold that stake at around 119 rupees. The stock is currently close to around 280, almost 140% surge from the OFS price. SJVN as well, it's seen a sharp intraday fall today, but the government in September sold close to 5% stake at around 69 rupees, and the intraday high today is somewhere around 169, 170. So almost 140% surge there as well in about 5 to 6 months. HUDCO was the other one. October of 2023, the government sold around 7% stake. The OFS price there was 79 rupees. The stock is well above 200 now, and around 160% surge from the OFS price since October of last year. And lastly, NHPC, that is the only one, but the OFS happened as early as last month, where the government had sold around 3.5% stake at 69 rupees. The stock is now well above 100, so around close to 60% surge from those levels as well. So the government has made its money, but the investors who invested in the OFS have made a lot more. Back to you.
All right, Hormuz, thanks very much for that. So that's, PSUs, and Hormuz has been sort of going at the PSU rally in different ways, looking at, a multitude of data points over the last couple of weeks or so. And this is the latest, just looking at, what the government sold stake at in the OFS and what price has done since then. And all of these returns coming through very quickly in the last year, year and a half or so. Well, the market's pulled back up. We're down only 60 points now. So 21,790 is where the index is. And I think the mid and the small cap indices are back in the green. Barely so, but there's green on the screen on those two. We'll take another quick break here. We'll come back. We'll get you a quick check on what's happening in dealing rooms on D Street Chatter. Nimesh gets us that. And we'll get our technical trading ideas with our experts. Stay tuned.
Wibbly wobbly screen is what we can see as we speak. But in the last few minutes, I think a couple of stocks that have done well from the oil and gas space. ONGC has moved up. BPCL as well has spiked up a little bit. So that's good news. So the Nifty continues to reel under some pressure, down close to around 80 points odd. But Nimesh, first up, did you hear anything about any kind of big selling? Why did we see such a big dip? And what are the flows picture looking like?
Well, so no specific reason for a sharp sell-off. Looks to me more like a profit booking.
Okay.
And far for the course, right? We've seen such a big rally in the PSU basket. A lot of the mid-cap stocks have rallied pretty hard. So looks like some bit of profit booking has happened in the broader markets in today's trade. No specific news that I have picked up on a specific sell-off. So that's the overall feedback. But again, from an institutional point of view, the activity still seems to be on the sell side. So that's the feedback that again, institutions are on the better sellers, and that's been the trend for the last many days as well. So FIs again looks like there will be a sell figure from the FIs in today's trade as well. I guess from the broader markets, well, the index is recovered, but there is the advanced decline has turned a bit negative in today's trade. There are a lot of individual names which are under pressure today, and looks like more of profit booking. But broadly, again, as I said, the institutional activity continues to be on the sell side.
Okay, all right. What about individual stocks? What are you picking up?
Well, so in terms of individual names, the first stock on my list is RBL Bank. That's been buzzing off late. In fact, we saw a big spike in today's trade after a bit of cool off as well. Some smart HNI investors seems to be quite active buyers as well in RBL off late. And the street is anticipating a corporate development very soon. So that's keeping the stock exciting in today's trade. The second name is SpiceJet. For the second day running, big volumes in that stock as well. I think on Friday the stock was up 15-16% and on large volume. So in SpiceJet, the anticipation is maybe you'll see another round of fund infusion from some large investors in SpiceJet very soon. So that's the trigger there. The third stock is Shilpa Medica. Been buzzing off late, but I understand the company was on a roadshow all of last week, met some large investors as well. And maybe there could be some fundraising in Shilpa Medica very soon. The last name is Jubilant FoodWorks. That's been under pressure post earnings. Numbers are a bit weak, but looks like some large long-only investors are active sellers, and hence even in today's trade, there are sell flows. So expect high delivery volumes in Jubilant FoodWorks.
All right. All right, Nimish, thanks very much for that. So interesting list of stocks to kind of focus on. So we'll keep an eye out on those. Shilpa Medicare. Fundraising coming soon, as Nimish tells us. Well, Nagaraj Shetty is back with us with short-term trading ideas, buy today, sell tomorrow, BDST ideas. What do you have for Nagaraj? And I mean, if you have a quick comment on the volatility since the last time we spoke, a word?
Yes, hi Prashant. Nifty has been volatile. We have seen some good correction from the higher levels. I'm still expecting Nifty to find support around 21,700 odd levels. It has bounced back slightly from the lower levels, and the consolidation movement of one or two sessions is likely to end, and we could see upside bounces from the lower levels. I'm not expecting any bigger decline from here. The decline is going to be the buy and dips opportunity for the Nifty. And secondly, the stock rotation, I'm stick with the same stocks what we had discussed a while ago. Rain and Poonawalla. Rain has declined after my comment on the stocks, currently at attractive places at the support. I'm same with the upside target for this around 200. Around 203, 204 levels, and the same stock, the Poonawalla. Poonawalla is currently trading at 480. I am stick with the upside target of around 505 in the next one or two sessions.
Okay, so those are some of the stocks. Thank you, Nagaraj, very much for the trading calls today. Let's take a quick break on that note. The volatility continues. The color is still red for the benchmark indices. We'll come back and look at the last leg of trade.
Yeah. Smooth going for most of the day, and then a little bit of volatility hitting us in the last hour of trade. Actually, I mean, it started at about 2 o'clock when the market peaked. There was a slow decline for about half an hour, and it picked up pace starting at about 235, 240. welcome back. The market's taking a bit of a breather with a 90-point dip. Gurmeet Chadha is with us, managing partner and CIO at Complete Circle right now. Gurmeet, great to have you with us here. Thanks for your time. What do I say about this market? Little up, little down, a little mixed today, and not completely one way. Any thoughts?
Prashant, I think the market was going up with anticipation that Fed will start cutting rates starting March. I think there's a pushback there. The yields have slightly gone up. I think there's also, in fact, I'm not too worried if FIs continue to lighten their positions in lead up to a big event, which is elections this year. Although the odds and probability of government coming back is high. So if you go into an event much lighter, it's actually good. Although despite 40,000 odd crore cash selling and largely selling being in banks, the index levels are still okay. So I think some lightening up is okay. I think the short-term triggers, as I said, is the 10-year yields to track in US as well as how the Fed reacts. I think there could be some money taking off, some profit booking also happening across PSUs, across defense, some of the other names. So I think there's a bit of profit booking rotation. Nothing much to really read into this.
All right. Hi, Gurmeet. Good afternoon. Good to see you. When the other stock that's reeling under pressure as we speak is Shree Cement. My colleague Timsy earlier today said that there are various details that are coming out with regard to that IT raid that took place in the middle of 2023. Now it's down closer around 5%. The numbers look absolutely splendid. How would you approach some of these companies? Shree Cement has been in the news because of that. One of the big outperformers, suddenly it's under pressure because of the IT raid. You have Polycab as well that's come under pressure because of that raid. Your view on a couple of these names. Are they providing an entry opportunity or would you stay away?
Hi, Nigel. Some of them, yes, right. I think in cement, Shree also, I think the valuations have always been on the higher side. Now, if you look at, for example, government continues to spend almost, we are looking at only percentage improvement in CapEx, but it's still 3.6% of GDP. That's upwards of 11.2 lakh crores. They want to give another 2 crore homes now under the Awas Yojana, which is higher than what they have done in the last 7-8 years. They did 3 crores in 8 years. And now we are talking of 2 crores in 5 years. So I think the thrust on housing, thrust on infrastructure continues. Cement, we've seen demand now in double digit and supply is actually lagging because of demand being low single digit for most of the decade. So, we like some of the large names, ACC and Ambuja we like. We like Sagar Cement, which I think is still trades at $55-60 a ton. Below replacement cost. The cost of setting up a plant today is almost $100. We've seen deals like Sanghi and others happening close to $90-100. They are at about 12 million tons, I think, and improving now. Good OPC mix. We like some of the building material names, so likes of Kajaria, Serra, some of the other building material names. So I continue to be long-term bullish. It's some that you have a large run-up in this space, and I think some profit taking is natural.
Okay, by the way, just got the eye. Look at Jio Financial Services today. Stock's having an excellent session. It's up almost 13% last I checked. Let's pull up Jio Finance, up 16% almost right now. And it's been quite a move. The listing happened, or the demerger really happened in September last year. The discovered price was around 250. Now the stock is approaching 300. Gurmeet, hi, good afternoon. So much happening in the financial landscape, right? I'm not even talking about banks. I'm talking about non-banks. And there's the Paytm saga on one side. And, then there's, of course, Bajaj Finance. And we talk about all the clampdown on unsecured lending from Reserve Bank, etc. What thoughts here on this non-bank space and a specific take on the moves that Jio is making of late?
I think someone's loss is someone's gain should be, I guess.
Maybe.
It's got to be a shift from Paytm. I also saw Fino up in double digits about almost an hour back. So it could be tactically that. Also, there's some now, I think there's speculations on Jio probably eyeing the Paytm wallet business. I don't know, can't confirm on them. Second, I think the market is differentiating financials. So if you see, for example, Poonawalla, they grew quarter on quarter by 9%. AUM growth has been 30%. And the cost of funds was 8% despite liquidity being very tight and interest rates being tight. So that's been rewarded by the market. And where the AUM growth is lower and NIMs have got suppressed and valuations are rich, like Bajaj and some of the other NBFC names, the markets have been not in a great mood. So I think they're differentiating. Similarly, in banks, I think ICICI, if you see, to a certain extent, Axis, I think the markets are fairly okay. But if you look at HDFC and SBI, I think that's largely in HDFC. I think they're a touch disappointed. So I think the big trigger for financials, in my view, is rate cut. I think till then, You may get a near-term support because of treasury gains with yields moving down. I think the bigger probably upside will come. I think amongst the space, I think this most attractive at this point of time, including banks and NBFCs.
Gurmeet, thank you very much for joining us on Closing Bell. Time to wrap up the market. It's been an extremely volatile last 1 hour. The Nifty ends down 90 points. That's 0.4%. On the benchmark indices. From the day's high, we've lost close to about 200 points, and that fall came through between 230 and 3, and from 3 to 330, market stabilized with this cut. All over the place for the Midcap Index, but the final tick is in the red, down close to about 100 points. Banks took it on the chin. The Nifty Banking Index down close to about 200 points, 0.5% gone on that, and financials like Bajaj Finserv under pressure. You had deep cuts coming through in State Bank of India, post its numbers. Even insurance companies like HDFC Life took a deepish gash, but the biggest one was UPL, finally down 11% plus.
Okay, just to quickly point out some moves on the mid-cap side of the screen, extreme moves really coming in. Paytm is ending down another 10% circuit. The circuit, remember, shifted from 20 to 10. Bank of India has been pummeled and literally sort of brutally hammered today because of the fact that margins have come under pressure. So 9% gone from that stock. Delivery has turned a profit, but anyway, the stock was sold off, 3.5% down there as well. And then I talk about the gainers, and here what else but PSUs to count. So IOC 7.5% up, HPCL 4.5% higher. If I look at some more names, look at LIC. I mean, LIC is up 5.5% today. Some of the PSU